Okay, all right, GM guys. Good evening, good evening, good evening. How are you doing today? I hope you're okay and welcome back to this episode. And once again, this video is brought to you by Sloan Academy. Okay, and so far we've discussed certain topics in technical analysis, as we said in the previous two topics, that we are already in the process of discussing smart money concept. That is the strategy we'll be discussing and breaking down in details in this series of videos to come and the ones that have been published. All right, so believe you've viewed these videos prior to this, and believe you've learned something. Even the last video we talked about the topics that we're going to be dissecting in the course of these videos, and one of it is market structure, and that is our main focus for today's video. All right, so before we proceed, we might want to ask, what is market structure? Okay, what is market structure? What can one say is market structure? Okay, so market structure basically is the anatomy of the market, the basic framework of the market. You get, that is the backbones, the blueprints of the market, what propels it into certain directions. All right, so that is exactly what we tag as market structure. All right, so this market structure, now we have three types, three examples, which we will be illustrating using a textbook diagram, and then furthermore we go into the chart in order to look at them very closely in order to understand it. All right, so there are basic ways I learn. Okay, let me just touch this before we proceed. There are basic ways I learn, and that method of my learning is, firstly, I go through a video. All right, viewing that video the first time, just get the information firsthand. All right, just to see exactly what's happening. Now the second time I go over the same video, now that is to check for things I didn't get the first time, things I must have missed out. All right, that is going over the video the second time, just to capture those things that I missed out. And then the third time I'm going over this video again is to cross match it with the notes I have taken um in the second study of this video. All right, so basically this is where I learn, and for some persons they might want to adopt this pattern, and for some persons their pattern is different. All right, it depends on what works for you. You can pick whatever works for you and you can roll with it. All right, so we want you to, in the course of this video, if there is anything you find difficult, if there is anything you find confusing, just hit the comment section and then drop your questions, and we'll come back to reply you as soon as possible. All right, so let's hit it. Market structure, and we are discussing in this point an uptrend. All right, so what is an uptrend? An uptrend is a movement of the market in an impulse and correction motion, forming a higher high and a higher low. All right, this explanation might not go well with you, so we'll just explain it graphically on the screen, the textbook diagram, so that you understand it. So basically now, market structure is a combination. Here is my path. So market structure is a combination of higher highs and higher lows. This is what we said in the definition. It might be confusing in the definition, but this diagram is not confusing. All right, so this is what we call an uptrend, where the market here forms a higher high here, a higher low here, another higher high, another higher low, thereby breaking this structure at this area. It broke the last high, as in a situation where the market moves and then takes out the previous high, creating a new high, and then a correction, and then goes again to take out the previous high, creating a new high, forming what we call a higher high and then a higher low. Let me just mark this out so that it won't be much of a difficulty. Yeah, all right, this is for uptrend, creating higher highs and higher lows, and then for the low now. All right, 2b2 on the side. All right, so let's say it, creating higher highs and higher lows with an impulse and correction movement. That's just basically what the market does, impulse and correction. Once you understand this, the rest might not be much of a difficult work. So basically now, where most traders get it wrong is the market structure. Most persons don't understand the market structure and then they get the perception of the market wrongly. They usually say the trend is your friend. So let's say you're on an uptrend, don't look for a sell setups. You get, unless it's substructure, that is you go under lower time frames and then you look for sales in order to sell into your bullish point of interest. You get, so that is only the time when you can take a sales in an uptrend. But if it's trading a long term, for example swing traders, now you can't go and um take a short position in an uptrend. All right, you're going to be kicked out. So this is basically what an uptrend is: the movement of the market creating higher highs and higher lows, this and this. And then let's go over to a downtrend so you understand what a downtrend also means. So basically now, if you collect this chart now and then you flip it the other way around, you get your downtrend. But we won't do that so it won't distract or confuse anyone, but I'll just mark it out so that we see both the uptrend and the downtrend. All right, so what is this downtrend now? The downtrend is when the market forms lower highs and lower lows. All right, if you look now, uptrend is going up and then downtrend is coming down. So basically from the name, up and downtrend. All right, so this market now forms a break of structure here. That means taking out the previous low. That's basically what we're trying to explain. Let me articulate this. That means, all right, so this should be lower low. Yes, lower low, and then same thing for all market forms. All right, and then let's articulate for the up part. Lower high, correct? Yeah, lower high. So that's basically what the market does for an uptrend and a downtrend. All right, so this what we're discussing is basic market structure. After this, we'll go over to the chart examples now, explaining it. Then maybe in the next video, we'll talk about advanced market structure. We'll be talking about the break of structures, the change of characters, and the shifts in market structure, the basic things you need to know. All right, so basically now I've just explained our uptrend. I've explained our downtrend. Now, if you look very, very well closely into this video, you see that there is one characteristic it has. If it's up, it breaks the structure. There must be a break of structure in order to identify the proper trend. If there is no break of the previous low or the previous high, it's not a proper trend. All right, so that leads us now to the third type of market structure, which is the consolidation. Now, in this consolidation, there is neither a break to the upside or to the downside. It's just a ranging market. It's just a movement in a box. You get tapping into reference ranges and then reversing. All right, so this area now for retail traders that study support and resistance, you can call it psychological levels. Now, psychological levels, I mean, is in the sense that it is not shown on the chart, but in your mind you're perceiving this to be there. All right, so that's what we're going to take now. It's a psychological level in the sense that you're not seeing it physically, but it's being perceived here that is there. So it's just a range where the market taps into up and down, up and down, up and down, up and down, and then neither breaks the high nor the low. All right, so there is a strategy I used in trading consolidations. Now, if I am to trade consolidations, I normally wait for the third tap. All right, this one, two, and then third. Then I can now start taking my entry because that has confirmed for me that I am in a range. All right, but if it's not for the third time, I'm not going to take this entry, and then I'm going to be very attentive to when it reaches like 90% of this high to take my profits because it might just reach here and reverse. You get, so that is how I take my consolidate my correction or ranging market entries. You get, but for some persons, if you see this now, maybe a new trader, if you see this now on your entry, just avoid it for now. Avoid it for now. Then watch how the market plays out before you can now take your trade. More like us traders, we react to the market. We don't predict what the market will do. We react from the market according to what it has showed us. All right, you get. So let's not waste too much time on this textbook diagram, because we are going to still go to the charts to see all these things now that we just discussed. All right, so let's get down to the chart, and then you will see clear examples of this uptrend, downtrend, and consolidation. So once again, this is basic market structure, the basic thing the market does. It has to break the structure up, it has to break the structure down, and then it can actually correct in a given um direction or area. All right, so let's take this up. Okay, so we are on the 4-hour time frame, and this is GBP USD. All right, this is GBP USD 4-hour time frame. So where do we start now? Let's start from here. Let's see this uptrend that we just discussed finish. This uptrend that we just concluded in discussing. All right, so flow with me. This now is exactly what I mean. This is our uptrend. You see, it bounces off, it breaks structure, it comes down again, it breaks structure. More like I'm only trying to say that this chart is on an uptrend. Now I'm zooming this thing in so you see exactly what's here. But then if you look at the overall picture, you will notice something now. What we'll notice is this chart, this trade is on a clear uptrend. Alright, floating from here, bounce to here, alright, to here, and then it breaks structure. It broke this place now. It created from here a low, a higher high, a higher low, another higher high, another higher low, and then look at this now. A higher high, another higher low. It's getting this area. Now it creates another higher high again, a higher low, okay, a higher high, and then at this stage now, it cancels out the uptrend and then the downtrend follows. All right, so in advanced market structure, we'll discuss what this um what this means at this stage where it cancels this. It's actually called shift in market structure, or change of character. You get, that is like from an uptrend to a downtrend, but we'll talk about it in advanced market structure. So at this stage, just understand and flow with me what I'm trying to show you. I'm trying to show you just the trends. All right, so you can flow with me now. This has been our uptrend for quite some time. We've been on uptrend, but notwithstanding, this is not the way it just looks. If you look into now, you see that there are substructures that moves little by little, little by little, in order to form this overall structure. All right, so if you scale down to lower time frames, you can see the structures very, very well, but one higher, because we're just trying to get our market direction. All right, so that being said, now let's look for our downtrend. So let's say, for example, now our downtrend started from here, and then we've just been moving in a downward spiral, in a downward movement now. All right, so creating lower highs, lower lows, lower highs, lower lows. If you look closely now, this is what we've been on. Okay, and then you now find other substructures and stuff within it. But basically, we've discussed now the uptrend. We've seen now our uptrend, we've seen now our downtrend, and then we are looking for our consolidation now, so that you will see the clear view of it. In case you sorry, excuse me, in case you make your analysis and you find a consolidation in your chart, so you know how to identify it and how to avoid it. All right, so let's use here, for example, now this most recent action. If you remember what I said again about consolidation, it's basically on psychological levels. in the sense that it's an area, it's a range where it's true, it's not seen with the naked eye. Now it's true, it's not, you're not seeing it, all right, but you perceive this is exactly what is happening. So if you look at this zone now, you see that market actually has been retesting this area for quite some time. So the market has been retesting this area for quite some time, and then also retesting area below. Okay, let's go there. Also retesting this area below. So we can see clearly that here is a correction. Look at this now. Bounces off. It didn't break through. It came down. Bounces again. It didn't break through. It came down. It bounces again. It didn't break through. It came, bounces again. It didn't break through. And then it came down again. It went up again. Then now broke through. Alright, so this area now has been our consolidation or correction. So far now, even on this lower time frame set, if you look closely, you still see exactly what we discussed in the uptrend and downtrend. Now there is this thing. These patterns now, these uptrends and downtrends doesn't only show on higher time frames. They also occur on lower time frames. But then on lower time frames, they are called substructures of the major structure. You get substructure of the 4-hour time frame. All right. So if you follow me now, you can still see this is a high, low, a high, broke through at this area now, and then we'll reverse to a downtrend, and you see we're now on the down, and then it moves. So that's basically what market structure is. Okay, I hope this topic now is well understood. If you look closely still, it's everywhere in the chart, it's everywhere. You can literally find your market structure anywhere. Look at this now, a high, a retest, it broke through. Okay, it came down and then broke through again, it came down and broke through again. So this is a clear uptrend. All right, and then at this area I now start finding a change into a downtrend. So that's basically what our market structure is all about: an uptrend, a downtrend, a consolidation. All right, so at this juncture I think we should be concluding with this video. One thing you should do is pick up your phone, go and download TradingView, look up these things. It might be difficult to find, but use the past tool at first. Look up these things, watch the way the market moves, and believe me, with constant practice now you get acquainted to it, and it won't be much of a big deal for you anymore. That is for new traders. But for experienced traders who already know what this is, you can just use this video now to sharpen your ability to the best you get. All right, so without wasting much of our time, we thank you once again for viewing this video. We hope you've learned something tangible from this video, and we'll be expecting your questions in the comment section. We'll be expecting you to share this video. I'll be expecting you to drop us a like. All right, see you in the next video. We'll be discussing advanced market structure, which comprises of our break of structure, our change of character, our shift in market structure. Then we'll now get into more serious matters. All right, see you.